A mutual fund is a professionally managed investment fund that pools money from many investors to purchase securities. Mutual funds are also classified by the principal investment as money market funds, bonds or fixed income funds, stocks or equity funds, hybrid funds, or others. Funds may also be categorized as index funds, which are passively managed funds that match the performance of an index, or actively manage the funds. Types of mutual funds based on structure: open-ended funds, closed-ended funds, and interval funds. This is how mutual fund is invested. Funds have advantages and disadvantages compared to investing directly in individual securities. Increased diversification. A mutual fund invests in different sectors and thus increases diversification. Daily liquidity. There is a daily updation of NAV in mutual funds. Mutual funds are managed by portfolio managers who supervise the fund's investments. Ability to participate in investments that may be available only to large investors. For example, many people don't have the facility to invest in foreign funds. Transparency and ease of comparison. Now we'll know what is NAV. NAV is most commonly used in context of open-end funds. Shares and interest in such funds are not traded between investors but are issued by the funds to each new investor and redeemed by the funds. A fund will issue and redeem shares and interest at a price calculated by reference to NAV of the fund. Investors in mutual fund pay the fund's expenses. Some of the expenses reduce the NAV, like management fee. The management fee is paid by the fund to management company or sponsor that organizes the fund. Distribution charges. Distribution charges pay for marketing, distribution of the fund shares as well as services to investors. Front-end load or sales charges, back-end load, distribution and services fee. Front-end load is a commission paid to broker by mutual fund when a share is purchased. Back-end load, which is paid by investor when shares are redeemed. Distribution and service fee. Some funds charge an annual fee to compensate the distributor of fund shares. Security and transaction fees. Front-end load is the commission paid to the broker when a share is purchased. Some funds have back-end load, which is paid by the investor when shares are redeemed. Distribution and service fees. Some funds charge an annual fee to compensate the distribution of fund shares for providing ongoing services to fund shareholders. Security transactions fee. Types of mutual funds based on asset class.